In this presentation, we will focus in on fund reporting for state and local governmental accounting. First, we'll think about why the funds developed, what the funds are. Once we have a little bit of history on why the funds developed, we might be able to have a better idea of what the funds currently are, how they're going to be used, and possibly more incentive to learn about the fund accounting. Fund reporting developed to meet the needs of reporting revenues and related expenditures that are legally or contractually constrained for specific purposes separately from revenues and expenditures without these constraints. So you can imagine the need that's going to be developed. We're saying, okay, there's going to be some legal or contractual constraint for these funds. How are we going to track the fact that there's some type of legal or contractual restraint for these funds? We could set up some type of fund accounting, separating this information out in some way, somehow earmarking it or somehow putting a tag on these revenues and these expenses and relating them together in some format. And you could see how that would develop into some type of system, the system being, in our case, fund accounting, fund reporting. The concept of a fund, in other words, what is a fund? A fund is a separate fiscal entity, which means it has its own resources, its own liabilities, and operating activities, has its own set of accounting records that allow it to prepare separate financial statements. Therefore, a fund is a separate accounting entity. In other words, the fund, we could think of it as similar to a business type of entity, even a sole proprietor having a separate set of books. That's going to be our fundamental principle. We want to basically separate the books from the owner's set of books. So the personal books should be separated from the entity's books, even with regards to a sole proprietor, where we don't have the business being a separate legal entity. We still have a separate set of books in that case. With regards to a C corporation, remember, we have actually a separate legal entity, and the ownership would be separate. But in essence, we want to set up a separate set of books. Similar concept is going to be here with the funds. We're going to say, all right, this is going to be a particular fund. We're going to set up a separate, basically, accounting entity, a separate set of books for it. Those set of books having their own general ledgers, and therefore we can create the financial statements from that accounting information. Fund categories. These are going to be the categories that we're going to group these different types of funds into. Governmental funds, this is going to be typically the largest category that we'll have. So when we think about different types of funds, we are usually considering a governmental type fund most of the time. We have proprietary funds. Proprietary funds are going to be those that act more like a business type of activity, where we might have some type of customer type of relationship or similar to a customer type of relationship within those types of funds, so they behave differently. And then we have the fiduciary funds, where the fund has some type of fiduciary responsibility. We'll get into some more detail about these categories now. Now we'll look at the governmental funds category. This is the largest category of the three, right? We have these three categories. Now we're looking at the governmental funds, the largest category. The governmental funds will include the general fund. The general fund is the most important fund that we're going to have. Now, consider this, we're going to have the fund accounting that's going to be different from the government-wide reporting. We've got the government-wide reporting that we're going to have, and then we've got the fund accounting, and then we have the general fund, which is going to be like the overarching type of fund. In other words, any type of fund accounting system is going to have a general fund or something could be named something differently, but a general fund type of fund is going to be applicable. Every accounting system will have a general fund, and every system will only have one general fund. So that's going to be distinct and different from the other funds. It's going to be like the most important fund, of course, for that reason. Other funds, we might have multiple different funds depending on the needs of the government. So we may have none of them. We may have multiple funds in others, in some of these other type of categories. We'll have the special revenue fund. Special revenue fund will be set up if we have a grant or some type of gift that is given, and it's for a specific type of purpose. So let's say we have a grant or a gift, and that is going to be restricted for the maintenance and use of a building or a fountain. Then we might set up a special revenue fund to be able to track that. The debt service fund. Governments that have bond obligations outstanding and certain other types of long-term general liabilities may be required to create a debt service fund. The reason for the debt service fund is to account for financial resources segregated for making principal and interest payments on general long-term debt. Then we have the capital projects funds. So a government might put and set up a capital project, such as building a bridge or building a building. And in order to track the funds related to the capital project, we would set up a capital project fund, typically thinking about a long-term type of project that we're going to have and wanted to account for that capital project in a separate fund. And of course, note that we might have multiple capital project funds going on at the same time because we might have different capital projects and we want to track that information in different funds. Then we have the fund balance classification. The fund balance is kind of like the equity section. So when we consider the balance sheet or the accounting equation, we could consider assets minus liabilities equals what would be the equity section for a for-profit organization, fund balance here. When we consider the fund balance for a for-profit, that is the amount that we would allocate to the owner, the net value of the business. It's the same for a governmental organization or the fund. The fund assets minus the liabilities is the fund balance. When we consider the fund balance, then we're also considering the fact that people are going to want to appropriate those funds or assign those funds, want to use those funds in some way, and we want to be as transparent as possible. So when we consider governmental accounting and people are looking at these fund financial statements, each of these funds having their own financial statement, they're going to be looking at, okay, here's the assets minus the liabilities, here's the fund balance. I want to do something with that fund balance. I want to use it some way. I want to apply it in some way. I want that money some way, right? And they're going to want to assign those funds in some way. Well, that being the case, we're going to want to identify different categories of the fund balances and say there's different levels of restrictions to the fund balance. Now, the levels of restriction can get a bit complicated because there's a lot of different levels of restriction, but the concept note, what we're basically saying, hey, this is the fund balance. This is the difference between the assets and the liabilities. People want this money in some way. They want to assign it out in some way. We need to have, if there's any restriction on these balances, to note some type of level of restriction so people know whether or not they can possibly get access to this money in some way. So the restrictions that we have from highest to lowest, non-spendable. So if we say the fund balance is non-spendable in some way, we're just saying, hey, it's, that is included in the fund balance. Assets minus liabilities are there, but don't expect to get it because it's totally restricted. It's non-spendable and we'll talk more about as we go through problems what it means to be non-spendable. But the second level will be restricted then. So then you have a little bit greater likelihood, but possibly not gonna get access to the fund balance act there. The next level is committed. The next level is assigned. The next level is unassigned. So when we're considering the fund balance, are we going to be able to get use of the fund balance? We want to think about these levels of restriction in terms of the fund balance. And of course, when we report the financial statements, that's going to be one of the things we have to consider in terms of the fund financial statements. When we consider what would be the equity section, we have to then think about how we're going to break out the equity section to the various assignments of the fund balance classifications. Is the fund balance non-spendable, restricted, committed, assigned, or unassigned? Reporting major funds. GASB requires separate columns for major funds. So therefore we have to identify what the major funds are going to be, and then we have to have a separate column for the reporting of the major funds. Non-major funds may be grouped together and reported in one column. So the idea here, of course, being that when we think about governmental accounting, we want to be as transparent as possible so people have the information they need. But we know that most people don't really care. I mean, most people are still looking at the governmental books as a whole, and the smaller funds aren't something that they really going to need the detail in. Therefore, it's not required to break them out. Oftentimes, we want to break out what would be considered the major funds and then possibly group together the minor funds in one column. General funds and funds meeting both of the following are going to be the items that are going to be the major funds that we have to group out. Total assets, liabilities, revenues, or expenses of the fund are at least 10% or the corresponding element total for all funds of that category or type, and the same element that met the 10% criterion is at least 5% or the corresponding element total for all governmental and enterprise funds combined. So in essence, we have this very specific category that will tell us whether or not we have to assign out and break out into its own column a specific major fund. reporting non-major funds. Even though GASB requires non-major funds to be reported in a single column, many governments report details regarding non-major funds separately, often combining financial statements as part of the CAFR, or the Comprehensive Annual Financial Report. In essence, then, we have a very stringent requirement for the requirement to break out the major funds. The idea there being that we want to be as transparent as possible with the major categories that people are going to need and want to see, but not be too detailed, and that's what's going to be required to be reported. However, reported in the Comprehensive Annual Financial Report, remember that this isn't even required at all. The minimum requirements are what are required, but most government organizations actually do prepare the CAFR, and within there, we might provide more detail to the smaller funds in part of the report, and that'll give the reader of the report as much transparency as possible. They can see the major funds, and then the ones that are interested in the allocation of the minor funds, because of course, groups of people involved in those minor funds are going to be interested, can go into the details of the report and find the information that will be broken out for those more detailed, smaller funds.